Why Stellar XM is quietly overtaking XRP and no one's noticing. The shift no one's talking about. Stellar's been dismissed as XRP's little cousin for years. Quiet. Under the radar. Built from Ripple DNA but seemingly stuck in the shadows. While XRP grabbed headlines with lawsuits, partnerships, and billion-dollar buys, Stellar just built. No flashy PR. No courtroom drama. No endless ETF hype cycles. But behind that silence, a storm was brewing. Because while crypto Twitter was obsessing over Ripple's legal battles and XRP's ETF rumors, Stellar was deploying actual infrastructure, quietly laying the foundation for what might be the most overlooked flippening in crypto. This isn't a meme coin rivalry. This is a battle for the future of global payments and on-chain finance. And here's the truth. The gap between XLM and XRP is closing fast, and most of retail has no clue it's even happening. Let's zoom in. While Ripple is still navigating regulatory minefields and lobbying for institutional clarity, Stellar already has it. It built with compliance in mind from day one. While XRP was fighting the SEC, Stellar was onboarding regulated anchors across Africa, South America, and Southeast Asia. And while Ripple's headlines focused on top-down adoption, banks, brokerages, and billion-dollar deals, Stellar focused on the ground game. Boots-on-the-ground integrations. Developers deploying smart contracts. Startups tokenizing real-world assets with Soroban. Ripple builds payment corridors between large institutions. That's great for liquidity. But Stellar is building open rails that anyone can plug into, startups, developers, even non-crypto fintechs. It's grassroots adoption. And it's working. Let's not pretend XRP isn't powerful, it is. Especially for institutional settlement and bridging massive liquidity pools. But if you're tracking the deeper metrics, the ones that reveal where things are really headed, it becomes undeniable. Stellar is now outpacing XRP where it counts. Utility. Developer traction. Ecosystem growth. Regulatory positioning. Infrastructure maturity. And if you want the receipts, they're right there on-chain. In Q1 2025 alone, Stellar saw a 160% surge in active wallets. That's not bots. That's not hype. That's users engaging with apps built on Soroban. That's businesses transacting through fiat anchors in emerging markets. That's DeFi protocols like Palago Labs moving real capital on-chain. Soroban didn't just go live, it exploded. Over 12 million smart contract invocations in just weeks. And this wasn't DeFi Deegans chasing yield. This was enterprise-grade finance, credit flows, tokenized invoices, payment-linked NFTs. XRP's ecosystem hasn't seen anything close. And while Stellar was scaling real utility, XRP was still trying to turn the SEC win into momentum. But here's the hard truth. The utility wave that was supposed to follow XRP's legal clarity hasn't arrived. Not in the way many hoped. Retail held on for years waiting for regulatory clarity to unlock XRP's true potential. But now that Ripple won the case, the price popped, the ETF hype followed, and then not much else. Because clarity isn't the finish line. Execution is. And that's where Stellar is now pulling away. The anchor network has expanded aggressively. Fiat on-off ramps have gone live in underserved regions where traditional finance barely works. USDC on Stellar is now being used for remittances, payroll, microfinance, real-world flows. XRP still hasn't captured at the protocol level. And the kicker? Developers are choosing Stellar because the tooling is cleaner, the contracts are live, and the integration path is faster. Meanwhile, XRP devs are still waiting for smart contract support to mature. Soroban's already live. Already scaling. This isn't about tribalism. It's about metrics. Adoption. Evolution. XRP is a juggernaut, but it's slow to pivot. It's weighted down by institutions, courtrooms, and corporate infrastructure. Stellar? It's nimble. Globally distributed. And it's moving fast. So if you're sitting on the sidelines waiting for another XRP moon cycle without checking what Stellar's doing right under your nose, you're missing the bigger picture. Because this isn't a rivalry anymore. It's a quiet overtaking. And by the time retail wakes up to that, by the time CNBC starts name-dropping Soroban and fintechs start announcing integrations, it might be too late to catch the early upside. This is your signal. Subscribe if you want real crypto commentary, no fluff, no hopium, just raw insight into what's actually moving this space. Because XM isn't following XRP anymore. It's charting its own path, and it's catching up faster than anyone thought possible. Real-World DeFi is happening, on Stellar. This right here is the turning point, the exact moment the game shifted and no one noticed. While Ripple was making headlines buying up Hidden Road for $1.25 billion and hyping up the first leveraged XRP ETF, Stellar was focused on something far more valuable: execution. Not noise. Not PR. Not financial theatrics. Just cold, hard utility. And their most important move in 2024? Partnering with Palago Labs to bring enterprise-grade trade finance on-chain, on Stellar. Let's not sugarcoat this. Palago isn't another DeFi ghost town with a flashy UI and a token doomed to collapse under Ponzi-style yields. It's not your typical protocol promising 200% APYs and vanishing when the liquidity dries up. This is a regulated real-world financial platform backed by institutional-grade standards. Palago is tokenizing actual receivables, supply chain invoices, trade contracts, and cross-border payments into smart contract-secured digital assets. These are the kind of flows banks normally gatekeep. Now they're being executed on Stellar, not Ethereum. Not Solana. And definitely not the XRP Ledger. Why does that matter? Because it proves something Ripple still hasn't. DeFi can be compliant, scalable, and most importantly, used by actual businesses, not just crypto-native whales farming pump and dumps. This isn't theoretical. This isn't a white paper. It's happening right now. Palago's users are real-world operators. Logistics companies financing cross-border shipments in Southeast Asia. SMEs in Europe unlocking working capital. Institutional players tapping into tokenized trade credit, all using Soroban smart contracts on Stellar. That's not just adoption. That's evolution. Since launch, Palago has moved over $80 million in tokenized trade flows. Not speculative bets. Not exchange-driven volume. Real on-chain transactions, backed by real assets, between real-world businesses. And all of that volume settles natively on Stellar, meaning it directly drives XM utility. Now contrast that with what Ripple's doing. Ripple is still in build mode, trying to bolt on DeFi via acquisitions, stitching together financial services through strategic buys like Hidden Road. That's a solid move for institutional prime brokerage, but they're still integrating. Still building infrastructure. Still aligning compliance and execution. Meanwhile, Stellar didn't buy a credit solution, it built one. And more importantly, businesses are already using it. This is what no one's talking about. The real flippening isn't in token price or ETF speculation. It's in actual usage. The silent war between Stellar and XRP isn't on crypto Twitter, it's happening in the trenches of adoption. And right now, Stellar is winning. Quietly. Methodically. Through integration, not press releases. Palago is just the beginning. The Soroban-powered DeFi ecosystem is taking shape, and it looks nothing like what we saw in 2021. No over-leveraged lending loops. No Degans spinning up food tokens. This is business-first DeFi, with fiat gateways, institutional-grade liquidity hubs, and regulated anchors that connect directly to real-world financial flows. We're talking asset-backed stablecoins with compliance hooks, lending platforms targeting SME finance, and permissioned smart contracts built for enterprise onboarding. This isn't about speculation. This is crypto meeting the real economy, and doing it without compromising regulatory standards. Something even the most mature protocols have failed to do at scale. And let's not ignore the ripple effect here. Pun fully intended. Every single trade that flows through Palago strengthens the Stellar network. Every lending agreement, every invoice tokenized, every receivable financed on-chain cements Soroban's role as a real financial backbone. That's not a vision. That's reality. Ripple's on-demand liquidity? Still promising. Still in pilot programs. But it hasn't seen this level of transactional flow directly tied to open, programmable smart contracts that enterprises can deploy today. That's the critical difference. Stellar isn't waiting for regulatory clarity, it built with it in mind. It's not hoping institutions will come, it's already powering them. And it didn't need a billion-dollar acquisition to do it. So let's recap. $80 million plus in live trade volume, tokenized and settled on Stellar. Regulated enterprise DeFi, not theoretical but deployed. Real XLM usage, not wash trading, not hype. Live smart contracts via Soroban, running mission-critical finance logic. Fiat on-ramps integrated with business flows, already serving Asia, LATAM, and Africa. Meanwhile, XRP is still mostly flowing through exchanges, brokers, and OTC desks. That's not bad, but it's not this. This is the quiet revolution. And Stellar's leading it. Because DeFi isn't going mainstream through NFTs and yield farms. It's going mainstream through real-world financial integration. And Stellar? It's not preparing for that moment. It's already living it. The more you dig, the more obvious it gets. XRP isn't playing catch-up anymore. It's building the next phase of on-chain finance, while XRP tries to reclaim the momentum it once had. Soroban versus XRP Ledger, smart contracts that work. Let's stop pretending this isn't the biggest difference maker right now. The XRP Ledger has always been respected for what it does best: speed, low fees, and reliability for moving assets at scale. It's efficient. It's battle-tested. But there's a major problem nobody in retail wants to admit. It's not programmable. At least, not in any meaningful, scalable, or developer-friendly way. XRPL smart contract functionality has been stuck in limbo for years. We've heard about hooks, about sidechains, about the devnets and testnets. Yet still, in 2025, most of the XRPL's programmability remains conceptual or fragmented. Now, contrast that with what Stellar did and actually launched. Enter Soroban. Not a patch. Not a side project. Not a theoretical roadmap from 2021 still waiting on delivery. Soroban is Stellar's purpose-built smart contract platform, and it's live right now. This is the foundational layer Ripple has been talking about, but Stellar actually built and deployed. Let's break it all the way down. Soroban is designed from the ground up to do one thing: make on-chain programmability safe, fast, and scalable, without compromising compliance or performance. It's not a bolt-on. It's not a gimmick. It's integrated directly into the Stellar core protocol, meaning it doesn't require external bridges or layer 2 solutions. No fragmented architecture. No cross-chain spaghetti mess. No praying that hooks eventually delivers. It just works. And the tech under the hood? That's where things get serious. Soroban runs on WebAssembly, WSM, giving it blazing fast performance, modular execution, and a massive edge over legacy smart contract engines like Ethereum's EVM. Developers use Rust, a secure, high-performance language already trusted by big fintech, cloud infrastructure, and enterprise software teams. This isn't Solidity copy-paste culture. This is real software engineering meeting blockchain architecture. And the result? Soroban smart contracts are already live, deployed on mainnet, processing real-world logic. And we're not talking about just a few demos here. Over 12 million smart contract invocations processed in just weeks after mainnet. Thousands of contracts deployed across DeFi, stablecoins, lending, and tokenized assets. Integrated into the Stellar consensus layer, meaning every transaction benefits from the same low-latency, high-throughput infrastructure XLM was built on. Meanwhile, what's going on over at XRP? The XRP Ledger is still piecing together a puzzle that Soroban solved 2 years ago. Yes, hooks, the XRPL native approach to lightweight contract-like behavior, is promising. But it's still experimental. It lacks composability. It's not EVM compatible. It doesn't attract serious Web3 or fintech developers. And Ripple's sidechain strategy? Still siloed. Still fragmented. And still not fully baked into the main ledger. This isn't an opinion. It's a scalability nightmare. You can't build the next wave of decentralized finance on infrastructure that's still testing the waters. You can't ask developers to build enterprise-grade systems when basic tooling is incomplete or requires migrating between forks, sidechains, or experimental runtimes. Soroban solved that. XRP hasn't. And here's the kicker: developer energy is shifting. The numbers tell the story. GitHub commits on Soroban-related repos now outpace XRP Ledger by over 35%. Soroban hackathons aren't just attracting crypto hobbyists, they're onboarding fintech developers, institutional dev teams, and enterprise-grade projects. Major bounties are being deployed, real money backing real innovation, not just VC-funded side experiments. This isn't just code. It's momentum. And that's what XRP is losing: developer mindshare. Because in this game, you don't just need validators and liquidity providers. You need builders. People who deploy real contracts, create real applications, and drive real utility. That's where the value flows in Web3. And let's be brutally honest here. Settlement is no longer enough. That's 2018's game. Speed and low fees are great, but in 2025, every chain is fast. Every chain is cheap. The winners now are the ones that can support composable, programmable, compliant smart contracts at scale. That's what Soroban delivers. The Stellar team didn't waste time chasing headlines or building half-baked solutions. They went straight to the source. How can we make smart contracts work for real-world use cases? Trade finance, stablecoin issuance, compliance-first DeFi. And they built the answer. And now, it's live. It's working. It's onboarding institutions. While Ripple's still tweaking developer tools and preparing for hooks to maybe go mainstream in another year or two. This is why the narrative is flipping. Stellar isn't just catching up to XRP. It's outpacing it in the category that matters most moving forward: infrastructure programmability. Because in the next phase of crypto, it's not just about which coin transfers money fastest. It's about which protocol becomes the financial OS for the future of global finance. And right now, Stellar's already booted up and running. On-chain metrics don't lie. XLM is gaining ground. Let's cut through the noise. Everyone's got an opinion. Everyone's watching headlines. But in crypto, hype is cheap, and metrics are the truth. You want to know which blockchain is actually getting used? Don't follow influencers. Follow the data. And the data is leaning Stellar. Let's start with user activity. In 2024, Stellar didn't just grow, it exploded. Active wallets on Stellar surged by over 160%. That's not bots. That's not airdrop hunters. That's real wallets being created and used because of Soroban's smart contracts, enterprise integrations, and actual cross-border financial flows. Compare that to XRP, which saw wallet growth around 20%, and most of it came in short bursts, aligned with ETF-related headlines or court case speculation. Translation? Speculative spikes versus structural growth. XLM's wallet growth is driven by applications. XRP's is driven by news cycles. One of those is sustainable. The other isn't. Now let's talk transaction volume, because this is where things get uncomfortable for XRP maxis. Stellar is consistently handling over 10 million operations per day. These aren't just token swaps or spam. They're tied to real-world payments, anchor integrations, Soroban contract executions, and stablecoin transactions. On the XRP Ledger, volume remains high, but dig deeper and you'll see the difference. Much of XRPL's traffic is exchange arbitrage, price volatility routing, or network pings. It's liquidity games, not economic utility. Here's the hard truth: not all transactions are equal. XLM's transactions are multi-hop payments, cross-currency settlements, and DeFi activity via smart contracts. XRP's volume? Still dominated by speculators moving between exchanges or wash volume created by bots. So while XRP might look active on the surface, it's not translating into real-world adoption, not yet. And now we get to stablecoins, the backbone of real crypto utility in emerging markets. Stellar has quietly become one of the most active stablecoin rails in the world. USDC on Stellar is being used in cross-border remittances in Latin America, merchant payments in Africa, and B2B finance in Southeast Asia. Add to that EURC, Engine C, and even regionally tailored tokens like XRP in South Africa. XRP? Its stablecoin game is still in development. Ripple announced plans. The XRPL community has initiatives. But in terms of on-chain stablecoin usage, Stellar is already live and delivering, and the gap is only widening. This isn't theory. This is field deployment. Now look at developer metrics. Stellar's GitHub repos, especially those related to Soroban, have seen a massive surge in commits, forks, and contributors over the past year. Soroban SDKs, tooling, and integrations are getting real traction from fintechs, not just DeFi bros. Soroban-based dApps are being launched that target real sectors: remittances, factoring, cross-border lending, and even CBDC infrastructure. Meanwhile, the XRP Ledger developer base is steady, but flat. Because XRPL's smart contract infrastructure isn't ready for prime time. Developers are waiting for hooks to mature, for sidechains to stabilize, and for the ecosystem to stop shifting under their feet. Stellar, on the other hand, gave them Soroban, and it works now. So what does this all add up to? XLM's ecosystem isn't growing because of hype, it's growing because of utility. Wallets? Up triple digits. Transactions? Real and persistent. Stablecoin usage? Embedded in emerging markets. Developer activity? Accelerating faster than XRPL's. You won't see Stellar trending on Twitter every day. It's not being hyped by influencers with bags to pump. But under the hood, the chain is moving. Quietly. Consistently. Globally. And this is the part people miss. Adoption isn't loud. It's steady. It's infrastructure-driven. It's boring, until it's not. Ripple may be busy signing big deals, buying prime brokerages, and teasing future utility. But Stellar is already logging the metrics every serious investor should be watching. Actual users, actual usage, and actual utility. So if you're betting on the chain that's actually being used today, not just the one that might be used tomorrow, Stellar isn't just in the race. It's gaining ground fast. The road ahead, why XLM's flippening might be inevitable. So here's the question everyone should be asking. Does Stellar have what it takes to overtake XRP long-term? Let's look at what's coming. First, Stellar's governance structure is far more decentralized. The Stellar Development Foundation doesn't control the majority of the token supply the way Ripple does with XRP. That alone makes it more attractive for ecosystem partners, especially in regions wary of centralization. Second, compliance-first architecture. Stellar didn't wait for lawsuits to figure it out. It built with regulatory clarity in mind from the jump, integrating KYC-friendly anchors, permissioned asset issuance, and enterprise tooling. XRP is still backpedaling from legal uncertainty and rebuilding trust. Third, Stellar's global expansion is hitting new levels. In 2025 alone, we're seeing new anchors launch in Nigeria, Colombia, and India. Real fiat ramps. Real-world access. Not just liquidity corridors between banks, but payment rails for actual users. And every one of those onboards brings usage to XM. And let's not ignore the macro shift. As institutions start pivoting toward programmable finance, compliant, scalable, decentralized infrastructure, Stellar is now the leaner, faster, more agile network. Ripple has the suits. Stellar has the builders. That's the quiet power play. Because while XRP still relies on top-down adoption through banking partnerships, Stellar is winning bottoms-up through developers, startups, and real user adoption. So no, this isn't some hype-driven flippening like ETH over BTC. This is a fundamental shift in who's actually building for the next wave of financial infrastructure. And that's why Stellar XLM is quietly overtaking XRP. Not just in one metric, but across the board. The only question now is whether you're watching it happen or waking up to it too late. You've seen the numbers, the integrations, the developer energy, the enterprise use cases already live on Stellar. While XRP dominates headlines, Stellar is dominating the foundation of crypto's next evolution. Palago Labs, Soroban, Real-World DeFi, and a global anchor network that's already onboarding the masses. So if you're betting on infrastructure, adoption, and execution, XM isn't just catching up. It's already ahead in ways most haven't realized yet. Don't sleep on Stellar. Don't wait for CNBC to tell you it flipped XRP. Subscribe to be crypto smart so you never miss what's actually happening behind the scenes in crypto.